Hey there, finance enthusiasts. I'm thrilled to have you with me today as we explore an essential aspect of the financial world, the U.S. 10-year Treasury bond note yield. Now, this might sound a bit heavy, but trust me, understanding bond yields is key to navigating your investments and the economy as a whole. So let's dive right in and break it down in a fun and engaging way. First off, what exactly is a Treasury bond? For those who are new, a Treasury bond is a government debt security that pays interest for a fixed term. The U.S. 10-year Treasury bond is particularly significant because it's often viewed as a benchmark for other interest rates. So why should you care? Well, the yield on this bond can provide insights into investor sentiment and economic conditions, impacting everything from mortgage rates to corporate borrowing costs. Now, let's look at that yield figure I mentioned earlier, 4.52% as of Friday, May 23. Can you believe it? This number is crucial because it represents the return an investor can expect if they hold the bond to maturity. If you're wondering how this affects you personally, think about any loans you might take on or how it influences the stock market. Higher yields typically mean higher borrowing costs, which can slow economic growth, while lower yields can stimulate it. But wait, what causes these yields to rise or fall? It boils down to supply and demand. When investors flock to safe haven assets like Treasury bonds, prices go up and yields go down. Conversely, if they start to sell off these bonds, yields rise. It's all connected to how confident people feel about the economy. Now, I'd love to hear from you. Have you ever invested in Treasury bonds, or are you considering it as part of your portfolio? Drop your thoughts in the comments. It's always interesting to see how different investors are approaching this. As we continue, let's consider how the yield impacts various sectors. When yields rise, the financial sector often benefits, as banks can charge higher interest rates on loans, but consumer goods may suffer, as higher rates can lead to reduced spending. It's a delicate balance that affects all of us. Remember to think about the implications of these yields in your everyday life. Are you planning to buy a house or refinance your mortgage? These decisions can be directly influenced by the movements in the 10-year Treasury yield. It's all tied together. And speaking of connections, I invite you all to stick around as we delve deeper into how these yields are calculated and what the economic experts are saying about potential future trends. You won't want to miss it. Also, don't forget to subscribe to our YouTube channel for more engaging discussions on finance and investment topics. To wrap things up, the U.S. 10-year Treasury bond note yield is more than just a number on a chart. It's an indicator of economic health that can significantly influence investment strategies and the broader market. Whatever your investment goals are, staying informed about these yields will help you make better decisions. Thanks for joining me on this financial journey today. I can't wait to see you next time as we tackle more intriguing topics together. Until then, happy investing.